Good evening, everyone. This is Rodney with the Triton Wave Market Outlook for Monday, March 25th, 2013. All right, let's look at the continuous contract for the S&Ps on the left-hand chart here. It's Sunday evening at 6 p.m. Central Time. The S&Ps are up a quarter of a point. So the spread so far in the last hour, 3 minutes has been a 4-point spread, 15.52.50 to 15.48.50, and it's up 25 cents right now. Basically, it's a wait and see what happens with Cyprus. We're talking about the third smallest country in Europe, but it may be indicative of what's to come with the European market. We've already discussed the fragility of the French market with its downturn in economic growth, the surprising downturn in economic growth. We've discussed in the last week or two the Italian debt crisis that really has not been addressed. And now we have Cyprus playing into this. We have people that want to rush into gold, but there are sellers in gold. So, like India's not buying gold anymore. George Soros is not buying gold anymore. So it's a struggle. It's a tug of war. So far, I'm getting pretty much neutral signals across the board, everywhere, waiting for some kind of for the waves to kick off. Right now, the S&Ps, as we've been looking at these waves for a long time now. Okay, so this group of, it's got to be like 2.5 weeks sideways. Okay, as this is going sideways on the daily, on the left-hand chart here, this last peak here and this higher peak up here. This has been one peak. This peaked with this February 12th, 13th peak, and this is a lower peak. This is the trading wave. These two are the trading waves for the S&P. These are and these three right here are confirmation waves. The confirmation waves are saying sideways to up. Whoops, let me get an arrow in there so it really actually does look sideways or up. It's saying sideways to up. The shorter term trading waves are saying down. Okay, on the left-hand chart here, we have the 21. We've got let me see what we have here. We got nothing. We got a peak, a matching peak, and now something that's trying to peak 90 points up on Friday. But mostly, okay, so 1, 2, 3, 4, 5. This was the whole week. It basically started and ended at the same place with some, like Bernanke announcements, Greek announcements, and then it bounced back up again. Apparently the S&P and the U.S. stock market in general doesn't really care what's going on in Europe, even though they should be caring, because once you start implementing taxes on bank accounts, this isn't something that's just like thought up in a vacuum, because I'm sure the Fed has backup plans and a crisis to do probably pretty much the same thing. So just be very, very careful of all that. Just with your investments, with playing this market, I don't think that there is a chance in hell for this to go skyrocketing up to, like to major areas like this, or on the daily. Actually, let me just see what the weekly looks like. If it does happen, I don't know. I kind of like playing shorts on the, like trend, counter trend trades. We're gonna look at a few stocks to see what they're doing, and a lot of them are looking are looking very saleable right now. Okay, I've got data back to 1997, in October 1997, and you can see these are pretty extensive wave charts, so it doesn't quite populate. I need like 30 years to populate the waves. But let's look and see what the weekly chart looks like. So this is pretty much in line. You know, you could make an argument for this to keep going back up, because T1, T2, T3, and T4 all look up. Everything looks great, except I know it's not great, and it's just a picture that's being painted that in the end it's going to turn out to be a forgery. Just mark my words. So this at any time can come down to this 8-period moving average, which is okay, that's 1531 if it comes back to the 8 on a weekly basis. On a weekly basis, it's 1490 if it comes back to the 21, and all those, the market will still keep the market. It could still be an up market. It doesn't look like a deep flush. It just looks like sideways. I mean, take a look at the 21 here on the. Let's go back to the daily. Daily on the left for comparison, and you can see this is already. It started down a little bit. Is moving up. It's right now flat at 10 minutes past 6 in the evening on Central Time. The 21-minute is up on T1, T2, down T3, T4, and neutral on T5. And you can see, I mean, this is why. It's just like, it's just flat. Well, I messed that up. Let me see here. I gotta learn how to draw these circles. There we go. Okay. It's neutral as sideways. So basically what we're waiting for is to find out what's going to happen with the euro, what's going to happen with the yen, what's going to happen with the Aussie dollar. And they're all dependent on what happens to this third smallest country in Cyprus, which it just happens to have in its account 5 or 6 or 7, maybe 500% more in their bank accounts than the gross national product of Cyprus, because of illicit or kosher money coming from Russia that needs a place to park. So some of the banks are in trouble, regardless of what's going on with the Russian deposits. And the ECB is meeting as we speak Sunday evening to decide whether it's going to do a $3 billion, I think it's like between $3 and $5 billion bailout for Cyprus. It's kind of indicative of what's going on with the rest of Europe. So it could lead to the euro going down, the dollar going up, could lead to gold going up. It could be all. I don't know which way gold is going to go, but I will look at a few stocks and tell you which way I think they are going to go. Right now, I think the stock market itself, the Dow and the S&P, looks like sideways. The waves are definitely moving, trending down, as you can see on the left-hand chart here. And eventually, it's just going to break down, and this is going to come down here. That's what I'm looking at. All right, let's take a look at Apple, mainly because I love Apple so much. AAPL, and let that populate a little bit. Okay, so the 21. Okay, here we go. So the market's moving up, Apple's moving way up. All right, so I actually hadn't looked at this. This, as you can see from here, T2, whoops, I meant to get an arrow here. Hang on a second. Okay, T2 broke down right in here in October, and so did Apple, and that's when we had our first sell at about 670, 670, 678. Okay, take a look at this. This 95 right here is the first time T2 has been above zero, and the 8 and the 21 have crossed. Let's make this a little bit bigger here. So the 8 and the 21 have crossed here, and this has moved above the 144 right here. So I'm looking for this now to hit that little spot right there. There's no reason it shouldn't go to 468. It's right now 461, which is more than anybody thought it was going to. Once it breaches this on the daily, there's no reason why I can't go up here. All right, let's look at this on a. And it actually may try to fill this gap back in here. You just have to wait and see. This gap right here, it already did it once, and it might do it again. If it does do it again, it'll come up to the 89. Okay, the red line's the 55 moving average. This is the 89 moving average. So, and possibly on an outside fantasy stretch, 505, at which time this is so shortable that it's like, it'll be an ATM slot machine for anybody who's patient to wait for it. Okay, on a 21 minute chart, kind of sloppy. You really can't see much. You can see on T5 it started to move up. Let's break this down. I like instead of the 21 minute, which gives you you know, much big picture moves. Let's look at the 1597. Let's see how that moves. Okay, that is a 2-week chart. So let's break this down even more. Let's look at the 610 on Apple. Let that populate a little bit. And let me see how far back this moves. I can't tell the date on this. Let me see. Well, this is 2 days of trading. Okay, so we can see that. All right. So this is like on Thursday. Let me just put a line in here so that we can follow this. Okay, this is Friday's. Whoops. Where am I? All right, this is all Friday's trade to the right of the white line, and this is Thursday's. This is Thursday's trade. Just a little bit move it over just a little bit here. Okay, so all of this was 8:30 Thursday morning. This is 8:30 Friday. You can so since the left-hand chart on the daily has already moved above zero. It did it on Friday on T2, but on T1 it's been above zero for the last five or six trading days. That means that you would not want to take these moves to the downside, because with some counter trend moves are really effective. On Apple, if it's not like a monster move to the upside, then it's not going to be a monster move to the downside. So, however, you can take the moves to the upside in concert with the daily as an anchor, and in concert with T5 on its own 610 chart as an anchor. So this move would have netted you 453, and you're out the same day at 460. So it's a 7-point move. It's a really, really nice option play, and you know, it's like a 20 or 30% move on an option play. Really, really nice. All right, let's take a look at something else. Let's take a look at. I also like Goldman Sachs because Goldman Sachs is doing something kind of interesting here. I think I'm looking at the 144 on Goldman. Even though I do like the 610. You notice that if I break it down to the 144, you can get a lot more day trading in there rather than swing trading. And the day trading seems to give you real tremendous heads up on entries on options when everybody else is looking the other way. So when everybody's dumping it, you're getting in. When everybody's getting in, you're dumping it. So let's look at a few plays here. This is, let me see here. All right, that's 8:30 one day. This is, I think there's a day in between here. 8:30, 8:30, 8:30. Okay, there's one more here. Hang on 1 second. All right, that's 8. Okay, what's interesting to note here is that this space right in here was Wednesday, this is Thursday, and this is Friday. So what's interesting is, that on the Wednesday move, because this is a 144 tick chart, you have to have 144 transactions for this to have one candle. So on a very slow move up of about 2 points, the day was very, very slow. There weren't a lot of ticks. On this move, on a 4.5 point move down, this has, if you look at the ticks from here to here, and you estimate the distance between the distance between this arrow and this arrow, you come to here. So this basically had almost twice as many 144 tick candles than the day before on the downside. Okay, so now it's going sideways, and basically what we're saying is the trading was slow to the upside, rapid to the downside. Lots of trading going on here because of the lot of ticks. Now it's going sideways, and the tick count is also much less. It's almost like Wednesday. So let's look at the daily on Goldman Sachs. Now if we just like scroll back a little bit right here, okay, on this day, on March 21, which was on Thursday, when this moved all the way down here. Okay, on March 21st, T1 went below zero completely. The next day, okay, which was Friday. All right, so my experience has been the first time one of these waves go below zero, the next day it tries to go up. So it did try to go up. It was up like $1.22, and at one point it was up, I think it was up like $2, $2.40. It finished up $1.22. And that's what this sideways motion is. It's an attempt to rebound from a huge move. I mean, this is like, you know, the banks in this country are so big, a 4-point move on Goldman Sachs is really hits a lot of pocketbooks. So, a lame attempt to go up, and then it came back down again. But more importantly, check this out. On the 144 tick chart on T3, on Wednesday, let me just clean this up a little bit so we can take a look at this again. Okay, this is T3 right here. And look at, you're looking at from the beginning of this arrow on T3, the green mark, all the way up to here, which is at 8:30 in the morning on Thursday. Clearly, this is going down. There's no question about it at all. Clearly, this is going up at the end of the day. So if you're in this, you have captured this entire move of $4 and I think it was like 38 cents. And that was worth like close to 150% on an option play. Really, really nice moves. Anyway, that is all so let me take one more look at what I think is going to happen for the future of Goldman. Okay, so this is what I'm looking at. If I'm looking for a possible, because, oops, I got the wrong one here. Okay, because T5 is above 0, T4 is above 0, T3 is halfway. This is below a little bit. This is moving up a little bit on the 144. We might try to it might try to blow up a little, like 2 points, or take out, or try to match this high right here on a bump up. Right now, the S&Ps. I don't know. I have no idea what's going on in Cyprus, but let me see. I see that. On another screen that I'm looking at, that the euro started off down and is now closing its gap, and the dollar started up and it's closing its gap, and gold is up 90 cents, which is nothing. S&Ps are up 220. What's ever going on in Cyprus, everybody seems to be blowing it off. So I'm looking for, if we can get up to 149 up here, which I really doubt is going to happen. Okay, but by the time this happens on opening for trade on Monday, this is going to be about 148.50 on the 8-period exponential moving average on the daily. If you can get 148.30 to 148.50, and then because this is already moved down below 0 on T1, and this, and on the 144, actually, let's see what the 21 is doing here. Okay, so on the 21, these are basically all, these are all below 0. So this adds more confirmation to this going down. So any move up tomorrow on the opening for Goldman, which makes it like a 1 or 2 point move, especially if the S&Ps are up strong. I would take Goldman. If you're lucky enough to get 148.50, that's great. If not, just like buy into it a little bit at a time. I'm sorry, sell into it, not buy. You're buying puts into it, and you're going to wait for the next move down to the next exponential moving average that I'm looking at is after the 55 is the 89, which puts Goldman at 140, and that's my next target. So, have a great evening, and it should be a very exciting week with the resolution of Cyprus and everybody else's hidden assets around Europe that won't be discovered unless there's a crisis. So, just wanted to let you know, for those of you who are unaware, I trade gold and silver for private clients. I don't trade it for them. I advise them for a monthly service fee. And if you want to get in touch with me, please call me at Triton Wave Guy. TritonWaveGuy@gmail.com. And have a great evening. Have a wonderful week trading, and I will see you at the next update.